Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Good afternoon. This is Dwaine Clarke with the Wealth Through Real Estate Investing podcast. I want to thank you again, our listeners, for coming on. And we have a very valued guest. Comes from a lot of questions that we get from our investors and clients. So we're really privileged to bring on an expert in this field of self-directed IRAs. I have on Adam I apologize again.
Sypniewski.
There
you go.
From Midland IRA. Adam is a senior member of the business development team at Midland IRA. Adam has over 10 years experience with alternative investments, including private placements, real estate, and other non-traded assets. He has assisted hundreds of investors, advisors, and investment issuers with their custody and administrative needs. And Adam has earned a certified IRA services professional designation in 2004. His primary role at Midland is business development, working with various capital raisers, advisors, investors, and other financial service providers to provide custody solutions. I want to thank you again, Adam, for being on the call with us.
Happy to be here, Dwaine. Thanks so much for having me on.
Yeah, it's a topic that's I think it's evolving over time with self-directed. Normally, you're hearing traditional investments and traditional IRAs. I started hearing more about it as in around 2008 when we started having the financial troubles, and we started getting a lot of calls because we're a brokerage and investment firm. That they want to diversify and get some money out of the stock market. So I started to hear more about the self-directed IRA where you can kind of control your destination. So can you kind of let us know how you kind of got started, and then what did you kind of see in the marketplace and things that kind of changed from that period of time?
Yeah, absolutely, Dwaine. So I came into the space about 2007. It was right after I had graduated, and I got my first job kind of at one of the few custodians at the time that were a lot smaller and kind of in this period of unbeknownst to me, but they were about to undergo a period of serious growth and enormous exposure to a lot of asset classes. I didn't totally understand the space when I got started, but it was where I kind of started out was in the commodity scene for self-directed IRAs. So being in Chicago, futures and commodities are, obviously regionally located and pretty popular here. So I had some involvement in that space, and then it kind of grew out from there in terms of the self-directed IRA. Opportunities, whether it be real estate, private placements, venture capital, PE, things like that. So it was about 12 years ago now that I initially started in the space, and have kind of been fortunate enough to expose myself to all sorts of investment opportunities that the clients that I've worked with have brought to the various custodians that I've worked for. So over the course of these decade or so, as I mentioned, all those asset classes that we've seen have grown in popularity, grown in accessibility. We see some evolution towards lowering these barriers to entry for a lot of your your Main Street investors, I'll call them, to have access to these more traditionally, or historically private investments. So it's nice to see that these opportunities are going to become, potentially more accessible to maybe the non-accredited investor crowd. So I'd say that's, where we're at today. It is definitely, there is a momentum picking up for, maybe, your clients and our clients to really gain access to a broader array of investments.
Yeah, so I was kind of doing some research on the self-directed. Did it kind of I don't know if it got started or picked up steam around the 70s or so, but I mean, because most people think of IRAs, they instantly start thinking of retirement accounts.
Yeah.
When they get like this self-directed thing, that it's just like it's kind of new, but it's been around for a long time. But it just, like you were saying, it's starting to become more mainstream. Like with the Jobs Act, different investment opportunities are coming mainstream for regular investors and not just really for like a selected few. Um, as far as the like actually what a self-directed IRA is, could you like explain that for our audience? Most
Yeah.
people are more familiar with it now that there's more education about it, but just getting kind of a more broader definition of it would be helpful.
Yeah, absolutely. So self-directed IRAs have been around as long as IRAs have been around. They self-directed is really a philosophy and approach to take to your retirement portfolio. People want to, usually one of their first questions is, well, I have a traditional IRA today. Can I have a self-directed IRA? Well, yes, you can. Traditional, Roth, SEP, those are all really tax status or structures that define how the contributions are, what contributions are allowable to those plans. But self-direction is just really a philosophy that means you, as that individual retirement account holder, you kind of take the onus is upon you to find the investments that you want to put your retirement account towards. Many people have, a 401k plan. Maybe they've rolled it over into an IRA previously, and they're at one of those large brokerage firms, those large custodians like a TD Ameritrade or a Schwab or something like that, where they can go on and pick through, a list of investments, mutual funds, stocks, something that might be curated by that custodian themselves itself, because because these custodians also have a brokerage element to them, they probably have, a vested interest in that individual picking one of those investment products. Self-directed gives you, the account holder, the ability to really go out and search the entire investment landscape to find an opportunity that you want to put your retirement dollars towards, whether that's the house a couple blocks away, whether that's a personal contact of yours is starting up a hedge fund, or maybe there's a Silicon Valley startup that you want to put a chunk of change down on. All these investment opportunities are available to hold within a retirement account, as long as there's really some paper trail. Chances are you can do it through a self-directed account. But to answer your question, Dwaine, self-directed has always been there. It's just the awareness. And like you said, I'd say it would be the financial crisis of that 2008 time period that really kind of hyped things into overdrive in terms of the popularity and the awareness of the self-direction philosophy. It's no different a status. It's just really taking your retirement account to a proper custodian that allows you and has that core competency to go out and execute an investment in a private opportunity.
Yeah, absolutely. I think too, as I look at it from a investment philosophy perspective, is just kind of having more control of your destiny. Like I said, with the 2008 crash, people kind of put their trust in these advisors that just put them into different stocks, and you can't of course blame them. Things change.
Mm-hmm.
But it kind of took away the control of the actual individual investor, that at the end of the day they get the benefits or the negative result of that investment. With the crash, stocks gone down, people lost a lot of money. But with these individual brokerage houses, like you mentioned, TD Ameritrade and Schwab, a lot of them, they get benefits, commissions, or have some onus to get you into these investments, compared to you wanting to go buy the house that's down the street. That's a good investment that you can probably make a really good return on, and then it's a tangible asset and you control it. So if you lose the money, it's it's your investment and you kind of took control over it. Kind of heading into my next question is, I know that all custodians are not the same. You got the TD Ameritrades, which kind of have their own type of platforms. Midland has the alternative scene. As far as what are the kind of the rules of and difference between TD Ameritrade compared to Midland?
Yeah, no, absolutely. So Midland focuses, as you said, Dwaine, strictly on the alternative side. So um, either an investor will come to us. Let's frame it this way: an investor will come to us with an opportunity in mind. In most cases, whether they are looking at a land sale for like a raw land purchase, that's pretty popular in the Carolinas or Texas or something like that. They'll come to us to transfer a partial or other cash, full cash amount of their existing IRA to set up an account to make that investment. Whereas TD, they're going to buy the Apple stock, they're going to buy the target date retirement funds, something that might be also passive, but something that's more popular that might have a load fee involved or a commission, as you mentioned, involved. Whereas all of our assets that we custody here at Midland, they're all private. We're not licensed brokers, so we're not making a commission. We have no vested interest in what type of investment you as an investor make. That's strictly your call. We just have to make sure that we're following the rules and regulations of the IRS in terms, as it relates to individual retirement accounts. So TD, Schwab, Fidelity, all your public equities and all your publicly traded instruments. Midland is everything non-traded, essentially.
Okay. So as like a new person, what are kind of like the steps to, work with a, company like Midland that you have either funds, with a previous custodian that don't support alternative investments and they want to, start new, was it from like the application all the way to buying an actual alternative asset? What's kind of like the steps that's involved?
Yeah, I'd sum it up in probably a three-step process, I'd say, Dwaine. So first, you have to open the account, which that kind of drives the whole deal. And I'll disclose this: a lot of people get hung up. Can I have? I already have an IRA at another custodian. Do I have to move the whole thing over to Midland? No, you don't. A lot of people have multiple custodians. It's not an uncommon thing at all, especially when you consider the self-directed investors of the world. So first step, open an account at Midland or wherever you plan to invest, your alternative, product. Step two is fund that account. And there's a couple of options there. The most common being funded via transfer from an existing IRA. Which is a trustee to trustee transfer. Another term for trustee to trustee transfer. That's a non-taxable event, meaning you're just taking it from one IRA to the other. Again, not uncommon for folks to do. The second most common way to fund an account is a rollover from a qualified account like a 401k, a 403b, something that you're an employer plan essentially. That whether you had a separation of service or if your plan allows for an in-service rollover, you can if those funds are mobile, you can roll them into an IRA. Again, not a taxable event. Third, less common option, especially for our space, would be a contribution. I think we'd probably get into it in conversation, but there are contribution limits on an annual basis that the IRS puts out there for the U.S. consumers. And to give everybody an idea, 2019 they were actually adjusted for the first time in a few years. You can still make as of March 27th, you can still make a 2018 contribution of $5,500 on an annual basis. That's across all your retirement, all your IRA accounts. So Roth, traditional, it's an aggregate amount. And then for 2019, that contribution limit is being raised to $6,000 on an annual basis. If you are over the age of 50, you can also make what's known as a catch-up contribution, which has a limit of $1,000, and that's the same for both 2018 and 2019.
So for the say if it's like 6,000, you can, and if you're over a certain age, you can add an additional. So it's like 7,000, or am I?
Yep. So for 2019, if you're over the age of 50, you can contribute up to $7,000.
Okay, very cool. And then I know that you guys are for-profit company. Like, what are some of like the typical fees that you or any other typical IRA custodian charges, or what are like kind of the process behind that?
Yeah, so so again, since we don't make a commission, any custodians in the self-directed space are going to charge you fees that are mostly based on either the value or they have more of a like an engagement and transaction fee. And what I mean by engagement is basically when you open an account, anything that's kind of activity based, when you open the account, when you fund an account or fund an investment, which would be the third step of the account process, that's where they charge fees. And it's, Midland, it takes a flat fee approach, so that we're not eating into your margins or anything like that on the return. So, usually, our philosophy is an annual flat fee based on the number of investments in an underlying account.
So just straight flat, just like one time, or is it like on a annual basis or?
An annual basis, yeah. So regardless
Okay.
the investment amount, whether it's $100,000 or $1 million, Midland, for example, is $295 a year to hold one investment in the account. So whether that's a piece of real estate at $100K or $1 million into a hedge fund, it's going to be $295 a year. There will be ancillary fees, which is pretty typical in our industry, but you'll find, if your clients, if your listeners are shopping around, we're priced pretty competitively. You'll find little differences here and there, but I've worked for a couple different custodians now, and everybody's really in line with one another, at least at this point in time in 2019.
Yeah, I mean that's actually pretty good, because I've been looking at other ones, and I have clients that have other custodians, and some of their fees are differently, and of course, like I said, each business is different. Some offer different stuff, so that's very good to know. As far as because we would do a lot of syndications, what is like a typical time frame? Say if we have a deal that we want to give the option for investors to invest in, what is like the typical time frame that they should put aside to know like it's the money is going to be active for that investment at this particular time? Do you know like a typical time frame?
Yeah, absolutely. That's a great question, Dwaine. It comes up a lot, and it's a good question to really educate the masses too, I believe, because there is time involved. We live in a society where we kind of want everything done in one click, and we're getting there, but our industry just has with subscription agreements and all the other KYC procedures that have to occur with this type of activity. There is some time involved. Now we're pretty much paperless at this point. And we do a lot of things through DocuSign, so I think Midland has sped up that process pretty significantly. But when we talk about those three steps that are involved with the self-directed IRA, the open the account, fund the account, and fund the investment. Open the account can be done within 20 minutes online, for us at least. On the back end, when you're funding the investment, that can be done next day upon receipt of executed documents and a funded account. It's the middle part. It's funding the IRA that typically takes the most time, Dwaine, and that's because we're transferring from an existing custodian. Some are very responsive and can get us your cash in a matter of a couple of days, especially if we're transferring via wire. But if you're funding, say, via 401k rollover, most of the time those are done by check. It's just the way that those plans work. They're not going to usually send out a wire. Sometimes they do, but in most cases, rollovers are have to be initiated one by the account owner, whereas an IRA transfer, us as successor custodian can be involved in that process. 401k rollovers are strictly dependent upon the plan participant, in other words, the IRA account owner. And that can take up to a couple of weeks in some cases because a check is being cut. It has to be mailed to us, and then it has to be deposited. And Midland, like many other custodians, do have like a minimum hold period for those funds if they're received by check. So usually, if I'm giving people just like a layman's quote, it's usually about 2 weeks end to end to open an account and make the investment. We can maybe shave that down to 1 week in the best case, and sometimes it's going to take 3 to 4 weeks if you're transferring from, say, an IRA at a local bank or something like that. That's where we see a lot of lag time because they're just not one of those larger custodians that are built and for the transfer out process, and it's not an everyday thing for them. So anywhere from 2 to 4 weeks on the long end, and maybe 1 to 2 weeks on the short end.
Yeah, that's very helpful. I literally got that question the other day of what the typical time frame was. So if you would, before we move on to our next question, would you kindly give out your email and your phone number if anyone wanted to call, like mid call or something like that, and that would help them.
Yeah, absolutely. My email is Adam at midlandira.com. That's ADAM at MIDLANDIRA.com. And my direct phone line here at Midland, 312-767-6863.
Okay, perfect. And just continuing on, because like I said, we do a lot of syndication and structuring. We have investor partners that are, family members that they do deals together, and then other investors that do deals together. And I'm not 100% certain. Every time I get this question or something similar to it, I just said, call your custodian and they'll be the best person to ask you. So since I got you,
Yeah.
what are the kind of the rules behind, family members working together? I know the term of disqualified persons and stuff like that, but we'd love for you to kind of explain a little bit more for us.
Yeah, no, that's a great question, Dwaine. So thanks for bringing it up, because this, people always think self-direction, when it comes to self-directed IRAs, like, oh, what can I invest in? And it's really, the IRS is more of, it's not what you can't invest in, it's who you can't invest with. So it's more of a question of who. And so disqualified persons. There are some really minor parties down the list. Where you really want to focus your attention is, like you said, on the family members. So who's disqualified to you is you yourself, your spouse, and anybody up and down your family tree. So think about your parents, your grandparents, your children, your grandchildren. That's lineal family members, not lateral family members. So if you're going across the family tree, brothers, sisters, aunts, uncles, cousins, those people are not disqualified persons to your own IRA. However, you yourself, your spouse, and up and down your family tree are. So that's kind of a general rule of thumb. So we can certainly get into the weeds with who majority owners and officers of a particular company, but those get into really some gray areas, because if you go on the IRS website, it'll give you a list of, I believe, seven kind of profiles of disqualified persons. Really, in I'd say 99% of our clients, if they have a concern of disqualified persons, it's with a family member, and that's where the determination is going to be made. A lot of times, it's gonna, you want to look at that family tree. When it gets into more finer points of who might be disqualified, a lot of times the custodian's not going to tell you exactly if it's okay or not. They're going to ask that you consult with a legal advisor, because custodians are passive in nature, and they're not going to take that liability of telling you exactly who you can or can't invest with. We'll broadly tell you the rules, but we're not going to give you an actual legal opinion that would hold up against, say, the IRS looking at you, looking at your account, auditing your account. So if you ever have any questions that, when it gets into the lower profiles on that list of disqualified persons, I always suggest that you consult a legal, an attorney or a legal advisor.
Okay, makes sense. And as far as other IRA holders can invest into a syndication or a real estate investment, that's something that they can do, right?
Yeah, oh, absolutely. And real estate syndications, Dwaine, those are like straight down the fairway for us. I mean, it's really commonplace. Any sort of memorandum-based, subscription-based offering is a great tool for IRAs. We see that happening a lot with more frequency because we've found a way to, especially here at Midland, we found a way to really speed up that subscription process, because people ask, can I start filling out the subdoc? Well, you have to engage your custodian at that point, because just as a rule here, and for everybody's knowledge here who's listening, the subscription, the registration has to be to the custodian for the benefit of the investor's IRA. It's going to be held in the custodian's tax ID. It's not going to be held in your personal Social Security number. That's where the tax shelter of an IRA comes into play. So just getting into some of the nuts and bolts there, something to keep in mind. But yes, syndications, closely held LLCs, single member LLCs is another subject we could talk at length on. But really anything that's paper-based offering that has some sort of operating agreement, subscription agreement, that's very commonplace for us, in the self-directed world.
And you had just mentioned just the LLC, just to kind of like to pivot onto the side. So can an investor create an LLC, fund that LLC, and then use that to fund the investment, or is there any structural difference? I know that my limited knowledge, so that's why I got you here, is to It has to be in the IRA's name, so be like John Smith, IRA, such and such. I don't know if you can clarify
Yeah,
that.
yeah. So people can invest their IRA into any LLC structure. Now, sometimes that's a multi-member LLC with a group of investors that they want to put towards the property, and that's fine. We just put their IRA on the schedule of members in an LLC. Now, there's another option that listeners might have heard of. You might have heard of, Dwaine. That's called like a checkbook IRA or checkbook control, and that's really utilizing the structure of a single member LLC, where
Gotcha.
instead of having multiple members, you have one member, and that one member is your IRA. So when you look at the schedule, it's the only member listed is Midland Trust for the benefit of Adam Sypniewski IRA. And it has to remain that way to allow for that checkbook control, because then the investor can go find a banking partner, set up, you can name the LLC whatever you like. I mean, as long as your IRA is the member of it, it can be ABC, LLC, XY, whatever you want to name it is fine. You just need to then go and open up a bank account in the name of that specific LLC, and you as IRA account owner have that check writing ability out of that bank account you've set up. Where we've then funded that bank account from your IRA here at Midland. Not all custodians do that. It's just something that really by nature involves a lot more administrative work. Not every custodian does it. Midland does. We can help you establish a single member LLC if you'd like to, or if you have an attorney contact that set up one for you, we can fund it from your IRA here. And then essentially your IRA is holding that one LLC investment, and you have the authority and also the onus of staying within the IRS rules and regulations for IRAs. So we're not looking at every transaction as a custodian, every time you're cutting a check. So it's just something to keep in mind if someone's considering that checkbook control option, that you're going to have to really be sharp on your understanding of the IRA rules, because a custodian is not checking your every transaction in real time, essentially.
Perfect. Yeah, I had it just we do primarily apartments and commercial buildings, but we have a couple fix and flip investors, and we had got a couple questions in from that. In regards to buying, renovating houses, what are some of the rules and some of the stuff they need to make sure to stay away from, as far as working with contractors, doing work themselves, and keeping out of trouble and make sure it's all within the guidelines?
Yeah, no, there's another great question that comes up a lot, and you're spot on, Dwaine, with your question. It's you can't go in and put any sweat equity into an investment property. IRS wants this to remain strictly an investment. They don't want you skirting the rules by going, they don't even want you to screw in a light bulb. So you do have to contract out any labor on a real estate investment. So whether you need a plumbing work or a new roof or whatever the case might be, you cannot pick up a hammer and do it yourself. You have to farm that all out. You have to hire laborers for that, and you have to pay it from the IRA. Also, the disqualified persons rule would apply to that as well. So you couldn't hire your kid to go and put in new windows on your house and your IRA's house, and then pay your kid from your IRA. Again, that's gonna break the disqualified persons stipulations there. So as long as you're hiring out labor and paying for it from your IRA, you should be fine to go.
All right, cool. Yeah, that definitely, because sometimes people think it's kind of a gray area there, and like I say, you just want to make sure that you are staying within the rules. Given that, what are some of the penalties if these rules are not, of course you don't want to even play around in the area. That's why you talk to a custodian about that, or your legal advisor. But what are some of the penalties if some of these rules are broken?
Yeah, so really it comes down to your age and then what you do. So anything on if you're taking cash out of your IRA in any fashion under the age of 59 and a half, that's going to be coded as what's known as an early distribution. So it means in the case of a traditional IRA, that means it's taxed as income, and then the early distribution penalty is 10%. So whatever income tax bracket you are, plus 10% is what you're going to be taxed on that amount distributed. Now, if you do a prohibited transaction where you engage with one of those disqualified persons, you could potentially have your entire IRA distributed So think about that your entire IRA is then, coded as income for the year. And not only will you be taxed, in your income bracket, whatever that puts you, whatever income tax bracket that puts you in, but then add another 10% on the entire amount of your IRA. So it's not something that you really want to mess with, because the tax penalty could be enormous. So I strongly suggest everybody kind of playing by the rules there.
Yeah, absolutely. One thing, a question for me, I'm familiar with what is the traditional and Roth, but I've been hearing about what like simple and the educational and the HSA.
Yep.
Can you explain what the difference is, and are those also accounts that you can use to invest in real estate, and what's the whole purpose of it? Pretty much.
Yes. Yeah. So all those vehicles you can invest in alternative investments, including real estate. So blanket approval for all that. When you're talking about what those different types of accounts are, if you heard a simple IRA or a SEP IRA, those are still individual retirement, vehicles. Simples are really a plan for like a small business. It stands for Simplified Employee Pension Plan. Really for those small businesses of the world that maybe don't want to do a whole 401k plan, don't want discrimination testing, things like that. It's really technical. We don't see a ton of simples, but they can be self-directed, and you can get into alternatives using those plans. SEP is a very popular vehicle for self-employed people. People who don't have any employees, because you can make an employer contribution along with an employee contribution, which now can, earlier we talked about the contribution limits for traditional and Roth IRAs. That's $6,000 for the year of 2019. When it comes to a SEP, because you can make an employee and employer contribution, you can get into the mid 50,000s in contribution limits. So it does depend on the income that you're earning as a self-employed individual, but the contribution potential is huge there, because you don't have a 401k plan. That's the philosophy behind that. So again, we can get into more of the weeds there if it applies to any self-employed people, but something you definitely want to consider if you're in that boat. You also asked about education savings accounts and health savings accounts. Education savings accounts, you might have heard, your audience might have heard the term Coverdell savings accounts. Essentially the same thing, very low annual contribution limits. I'm a parent, so listen, they're a great vehicle if you can't find another one. But I'd say, here in the state of Illinois, we have Bright Start 529 plans, if you've heard of them. It's a similar philosophy, but there's contribution limits of, I think, $2,000 on an annual basis for an education savings account. And with the way tuition is growing here in this environment, you're going to get a few books for something like that. So it's still a good something, if you want to get exposure to an alternative in, say, your child's education savings account, you're able to do that. Like you can't, there's more flexibility with an education savings account as opposed to, say, a 529 plan, but just something to consider. Health savings account, again, we've seen these high deductible plans growing in popularity within the last 10 years because of legislation that's rolled out. Again, it just allows you for the opportunity to contribute to a individual health savings plan, and then put that money to work into some sort of real estate investment or other private placement or some other alternative that you're looking at. So again, it just comes back to flexibility and familiarity and the ability to get into some sort of alternative investment for any type of those plans.
Yeah, I appreciate you explaining. Yeah, like I said, it's something I was curious about, and like I said, I'm only familiar with just the traditional side. Just jumping ahead back to the syndication side.
Yeah.
We do most of our deals with loans. What is the only thing I am familiar with as far as the non-recourse part of it? What are your rules and your thoughts on what is the process of a IRA account holder investing in using a loan?
Yeah. So kind of what I'll start kind of from the top. So you can't personally take a loan from your IRA. So a lot of people ask that. I'll just throw that out there since we're on the subject of lending. If you're if you're going to be financing a deal, and usually it's in the case of direct real estate purchases out of an IRA.
Yeah. Mm-hmm.
So we'll see folks that want to purchase a property and they only have, 40% of the market value in their IRA. So they'll purchase 40, put down the money for the 40% of the cash in their IRA, and then leverage the remaining amount through what's known as you mentioned, a non-recourse loan. Anytime you extend leverage from an IRA to make an investment, particularly within real estate, you have to use what's known as a non-recourse loan. And not every lender out there will extend a non-recourse loan. And essentially what that means is that, in the case of a default, they can't go after, the lender can't go after anything but that asset that, was used to invest in. So, can't go after the other assets in your IRA, can't go after you personally. It's limited strictly to whatever that usually real estate investment is. So again, that's why not a lot of lenders do it. There's a few banks out there that will. A Google search will yield the most popular names for sure. So if it is something you're looking at, there's resources out there. But if it comes to say like a real estate syndication, what we'll see more or less is leverage at the entity level. So if there's like an LP or an LLC created, that entity will be the one that's extending leverage, and that's fine. It doesn't need to be non-recourse at that level because it's the entity's responsibility. But what you will get into then is the subject of what's known as UBIT or UBIT, unrelated business income tax, or unrelated debt financing income, UDFI. I would recommend if someone's investing in a syndication that has leverage, you research these topics a little bit. It's really going to come down to, it's really in a tax advisor's wheelhouse, a CPA's wheelhouse that can tell you exactly what it is and how you can calculate it. But it basically means that if there is some income derived on an investment that used leverage, you might be subject to tax on that amount, a ratio, that it aligns with whatever the leverage was on that investment. So again, I won't get into too many particulars, but a custodian like Midland is not going to calculate what that tax might be. You need to engage a CPA for something like that. But just know that it might apply if your syndication is using leverage. It's what's called UBIT or UBIT, and the tax form for that is called a 990T. So again, just a couple of nuggets for the audience to kind of research if they're considering that.
Yeah, absolutely. I mean, that's some great information. Yeah, it actually answered a lot of the questions that I had. You covered a lot of the fees, and you said kind of the process. I got the 3-step process, and there's like just like a bi-direction letter that I'm familiar with that you fill out and go through a whole bunch of different stuff to get the account funded, and then fund the investments and stuff like that, and you kind of walk them through the process. Mm-hmm. Yeah, you guys, you and other custodians are a big help as far as. Because when I get a lot of investors that have these accounts, I say, these are the folks to go with, and they'll answer all your questions in order to get involved with an investment like us. So I'm kind of glad for the information that is now more readily available on the marketplace, and doing, podcasts and videos like this. I think is extremely valuable, especially from a syndicator or investment broker, or just the IRA account holder itself. So is there any tips that you can give our listeners that could provide any more value as far as the IRA journey, or anything that they should avoid or watch out for in order to become successful?
Yeah, no, I think you really hit the nail on the head there, Dwaine. Talk to a custodian first. We're pretty, a lot of us, the philosophy is we want to raise awareness of this because it, really helps all boats rise. The more people know about self-direction. We're happy to educate you as much as possible. We can't advise you, but we're resources. We'll tell you that, don't try to do everything and figure out everything yourself. This information is free. We're here to coach you through the process, because the last thing you want is a huge tax bill that you weren't prepared for. If you go to your Schwab account and say, hey, send $50,000 to my account that I've set up over at XYZ entity, they might not know that that's an IRA transfer, and you're going to get, a taxable distribution, for a 1099 produced for that. If you engage a custodian and they walk you through the process and go through their steps, you're not going to get taxed for it. So, or at least get, reported tax for it. There's ways to resolve it, obviously, but save yourself the headache, engage a custodian, involve them in your investment plans as early as possible, especially when it comes to direct real estate, and you have a closing date in mind or anything like that. Always talk to us as soon as possible. We'll be happy to help you and give you tips where we can and coach you through the process, because you're not alone. A lot of folks haven't done this before, and it's their first time doing a deal. This is the only one deal that they've done. So we're happy to be that resource for you and educate you on the process. I think, Dwaine, you put it perfectly. Just involve us, and we'll get it done for you.
Yeah, I really appreciate it again. Like I said, particularly in the last couple of weeks, I've been getting a lot of IRA questions and stuff. And like I said, I just got like some very limited knowledge. And like I said, it's like, appreciate talking to folks like you. Again, what is your email, your direct phone number where we could reach you, reach out to you and get any questions answered now into the future?
Yeah. So I'm in Chicago here. 312-767-6863 is my direct line. And my email for anybody who wants to ping me is adam@midlandira.com.
All right, perfect. I really appreciate your time. You answered a lot of questions, especially for me. Like I said, I've got limited knowledge, so I actually learned a lot on this call. I'm pretty sure there's going to be a lot of value to our investors. And like I said, I hope they reach out to you as far as any questions. And like I said, some of our deals that's coming up that, they kind of, help kind of cure some of the questions that they may have. So Adam, I appreciate you again. I'd love to connect with you again in the future, and have a nice day. Thank you again.
Yeah, absolutely, Dwaine. Thanks so much for having me. It was my pleasure. Thanks.
I appreciate it. Take care.
Yep, you too.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.